Hello everyone. As an NRI, you may find yourself in various situations necessitating the transfer of funds from your NRO, non-resident ordinary account, to your NRE, non-resident external account. These situations often arise from the complex financial landscape that NRIs navigate, straddling two or more countries. You might have accumulated funds in your NRO account from the rental income on the property in India, dividends from your investment in Indian stocks, or perhaps you have recently sold a piece of land in your hometown. As these funds grow, you might want to consolidate them in your NRE accounts for better management or to take advantage of more favorable interest rates or tax benefits. Another common scenario is preparing for a significant expense in your country of residence. Maybe you're planning to purchase a home, invest in business, or fund your child's education. In all these cases, transferring funds from your NRO to NRE is often the first step towards repatriating the money. The process can also be triggered by favorable exchange rates, prompting you to move your Indian earnings to take advantage of the currency fluctuations. Sometimes life events such as retirement or decision to permanently return to your country of residence can necessitate these transfers. In these cases, you might be looking to move all your Indian sourced income out of the country, that is NRO to NRE transfer. Now, this becomes a critical part of the process. Understanding how to navigate this transfer efficiently is essential for NRIs to manage their finances effectively across borders. It is not just about moving money, it is about optimizing the financial resources while staying compliant with all the Indian regulations. So in this video, I'm going to discuss all the aspects of sending money from NRO to NRE, which will eventually make your remittance from India to foreign country hassle-free. So stay tuned till the end. If you're new to this channel, I'm CS Keerthana. I live in Dubai and I run the consultancy, a firm which is specialized in NRI services. I've done my CS from India, CMA strategic level from UK. I'm also a SEBI registered overseas MFT. Every week I bring an explainer video on various topics related to NRI issues in this channel. If you're looking for tax, finance, FEMA related topics, please subscribe this channel. In this video, I'm going to discuss how to transfer money from NRO to NRE, and specifically I'm going to focus on first, the difference between NRO and NRE account. Second, the laws you should understand. Third, the limits for repatriation of money. Fourth, the process and the people involved. And as a bonus point, I'm going to briefly discuss alternative ways to send money to foreign country from India without remittance to NRE account. So let's begin. Let's start with understanding the difference between NRO and NRE. These two account types serve distinct purposes in financial lives of NRIs. An NRO or non-resident ordinary account is essentially a repository for all your Indian sourced income. This could include anything: rental earning, dividends that you're receiving from the Indian investment, pension from the previous employment in India, or you might have sold and the proceeds from the sale of the property, etc. Think of it as your financial footprint in India, capturing all economic activity you still have tied to the country despite your non-residential status. One key characteristic of NRO account is that interest earned on it is taxable in India. Additionally, there are strict restrictions on the repatriability of the fund from this account. It's not easy to transfer the money from NRO in one single click to your country of residence, like what you can do with NRE account. On the other hand, an NRE or non-resident external account is designed as a home for your foreign earnings in India. When you transfer money from abroad to India, this is where it typically lands. NRE account offers several advantages that make it very attractive for NRIs. Firstly, interest earned on NRE account is tax-free in India. Secondly, both the principal amount and the interest, they are fully repatriable, meaning you can transfer the funds back to the country of residence or abroad without any restriction. NRE accounts also often offer better exchange rate benefits when you are converting foreign currency to Indian rupees. However, it is important to note that you can't credit any income earned within India directly to your NRE account. This is where the need for transfer from NRO to NRE often arises. By moving the funds from your NRO to NRE account, you essentially are converting your Indian sourced income into a more flexible, tax efficient, and easily repatriable form. If you want any professional assistance here, please feel free to contact us. You can visit our website www.keerthisfinfo.com and book an appointment by providing your requirements. Our team will get in touch with you. Now let's come back to the topic. When transferring funds from your NRO to NRE account, you're not just dealing with the simple bank transaction. You're navigating a complex regulatory landscape governed primarily by two sets of laws. One is FEMA, that is Foreign Exchange Management Act, and second one is Income Tax Law. Understanding and complying with both the laws and the regulations is critical aspect for smooth and legal transfer process. FEMA, enacted in 1999, replaced the earlier FERA. Its primary objective is to facilitate external trade and payments while promoting the orderly development and maintenance of India's foreign exchange market. In the context of NRO and NRE transfers, FEMA regulations stipulate the limits on how much you can transfer, the purpose for which the transfer is allowed, and documentation required to prove legitimacy of the funds. Under FEMA, you are required to provide declaration stating the eligibility for the transfer. What is the eligibility? In simple words, it is proving to the Indian government that you have acquired this fund through legal means and that transfer itself complies with all relevant FEMA regulations. FEMA also governs the repatriability of these funds, ensuring the movement of the foreign exchange in and out of India, which is controlled and monitored. On the other hand, income tax law comes into play to ensure that all the tax obligations on the funds which is being transferred have been met. Remember, the money in your NRO account is from Indian sources and it is subject to Indian tax laws. For example, let's assume that you have sold a land in India and before you can transfer these funds to your NRE account, you need to ensure that all the applicable taxes have been paid and the legal formalities are completed. If you get dividends, then this also has some tax implications, right? So complying with both FEMA and income tax is essential for ensuring the transfer of funds from NRO to NRE in legal and smooth manner. It protects you from potential legal issues down the line and helps you to maintain the integrity of India's foreign exchange and tax system. So now you understood the background, right? One of the most common questions NRIs have about transferring the funds from NRO to NRE is, how much can I actually move? The answer is, as per the current RBI Reserve Bank of India's regulation, it's quite generous. You can transfer up to $1 million per financial year. The limit is part of liberalized remittance scheme introduced by RBI to provide greater flexibility to NRIs to maintain their Indian sourced funds. The financial year in this context runs from April 1st to March 31st, aligning with the Indian fiscal year. It's important to note that this $1 million limit is cumulative for the entire financial year. This means all your NRO to NRE transfers within this period should not exceed this amount in total. The limit includes not just the principal amount that you're transferring, but also applicable taxes. I repeat, applicable taxes. So if you're transferring the funds on which tax needs to be paid, the tax amount is considered to be the part of this 1 million limit. This is very important consideration when you are planning to transfer large sums. One key point to remember here is, this is the use or lose it limit. That means any unused portion of $1 million cannot be carried forward to the next financial year. For example, if you transfer only 500,000 USD in one financial year, you don't get to transfer remaining limit to the next year. The limit is reset in the next financial year at 1 million. Okay, I hope the point is clear. For most NRIs, the limit comes around 8 crore 30 lakhs rupees. It provides ample room for managing their Indian finances. It allows for significant flexibility in moving the funds earned in India for more advantageous purposes in NRE account. However, if you find yourself needing to transfer more than 1 million USD in financial year, you can approach or apply to Reserve Bank of India for some special approval to exceed this limit. This process is typically done through your bank and may require some additional documentation to justify the need for higher transfer amount. It's worth noting that this limit applies specifically to the transfers from NRO to NRE accounts for repatriation of money abroad. It doesn't affect incoming remittances to your NRE account from foreign sources, which is actually unlimited. I hope there is no room for confusion. Now let's understand the process and the people who are involved in the transfer. First, the banker plays crucial role in the NRO to NRE transfer process by providing A2 form. The form is a standard document used for remittance purpose. and it is essential for initiating the transfer. The banker is responsible for not only supplying this form but also for obtaining all necessary permissions, approvals which is required for RBI. This aspect of the process is handled entirely by banker and it simplifies the thing for the account holder. The banker's duty is to help you with regulatory requirements are met and the transfer complies with all current RBI guidelines. Second party is you. You need to give a declaration to Income Tax Department. Form 15CA is a self-declaration form that account holder can complete online through Income Tax Department's website. This form is actually a personal declaration regarding the nature of the transfer and its tax implications. By filling out this form, you essentially are going to state that you have accurately reported the transfer and associated tax liabilities. The online submission process makes it convenient for the account holders to complete this requirement from anywhere, streamlining the overall transfer procedure. You can file this form by logging into www.incometax.government.in. Next is, of course, Chartered Accountant for Form 15CB. It's a certificate which is to be obtained from CA. This form serves as a professional verification that all applicable taxes have been paid on the funds which is going to be repatriated to NRE account. The CA examines the nature of the fund, ensures proper tax deductions have been made, certifies the tax compliance of the transfer. The additional layer of the verification is particularly important for the transfer exceeding 5 lakhs as it provides assurance to the account holder and the banking authorities that the transfer is in full compliance with the tax regulations. Alternatively, you can get certificate from income tax officer from your jurisdiction. But involvement of an income tax officer is not always necessary for every transfer, but they can be crucial in certain situations. If you're claiming specific tax exemptions or require a certificate for lower tax deductions, then you may need to approach the IT department. Otherwise, the transfer of the money from NRO to NRE involves only 3 people, as I said earlier. First is banker, second is you, third is CA. It is common misconception that NRIs must transfer funds from their NRO to NRE account before sending money abroad. In fact, it is not mandatory to route the funds through NRE account. NRIs have an option to remit funds directly from NRO to their foreign bank account also. However, it is crucial to understand that the procedures and the regulations for such direct transfer to your foreign bank account is largely same as those for NRO to NRE transfer. The choice between transferring to an NRE account first or directly to your foreign account often depends on the individual financial strategies and the circumstances. Before you take a call, you need to remember about the tax implication. It's an important factor because the amount which is standing in NRE is tax-free from Indian taxation perspective, and it is advantageous if you're planning to keep the funds in India for some time before making the final repatriation. Remember, this advantage may depend on the tax system of your country that you're residing. So I can't make a generic conclusion about it. You should also know that if you need funds immediately in your country of residence, then of course direct transfer to your foreign account might be more advantageous, because bringing to NRE from NRO then again to your foreign bank account involve multiple people and channel, which may delay the entire transfer process. Remember, like I said earlier, the procedure is largely similar, but the documentation in the form might have slight variation depending on whether you are transferring to an NRE account or directly to the foreign account, and more importantly based on the laws of the country that you are living. Always consult with the bank and the FEMA specialized person to understand the specific requirements for your situation. When in doubt, don't hesitate to seek professional advice, especially when you are considering moving large transfers or large sum, because you have to navigate the complex compliance requirements here. So I hope this video made the transfer from NRO to NRE quite clear for you. This is it for today. See you next week with another interesting video. Till then, bye bye.